Hello, welcome to JS Services Strategy Review. Today we're going to go over August 26, 2016 with the crude oil and show how the order book can help support your awareness of the market state. Crude oil is in a neutral digestion. Attributes of that digestive state are more sideways, but anytime you're in a digestive trade, it can be the precursor to a breakout, and especially when structure we have the R level equal to the directional, that is more typical for a breakout situation. If we look at the market color profile, we don't have purple in the ADX, which is a tell for a trending situation, and we can also see that we've got a positive DMI and we have a negative signal in the stochastics. So this is what's keeping us kind of in this digestive, which way are we going to go for the crude oil. Looking at our strategy themes, the optimal strategy themes are to fade momentum into the critical range extremes at the upside pivot and the downside pivot. And if the market is going to coil up and break out, it's typically going to do that from the R level directional, which today is at 47.26. We had some news events, and Yellen was speaking. Just coming in here after that event and to get some awareness to what's next for the crude oil. So we can see that the market was coiling around the directional, which is typical of a market in a digestive phase that's going to break out. However, when we do have these breakouts, they're typically clean. So we started out here, we have this nice structure, and then we have this event, which we break structure here. Market gives us a head fake, holds the CR minus, and then we have a charge higher right straight up through the upside pivot, and we're stalling out at the CRX plus at the moment. Now, if this market's going to transition into a hedge theme, it should continue to hold aggressive positive structure, and we'd anticipate this market to base above this metric here and continue to work higher. One thing that we know about the CRX plus, however, is it is an extreme for a critical range breakout, for a false breakout. And we know that to confirm an upside breakout, this level must be violated. Otherwise, it can cap off kind of a head fake. So we always need to be concerned about that, especially when we have a really sharp charge here. And we did have this tell here that the market did break structure. It should just go and scale higher. Topping out here, we want to see the market build structure and just continue to power right through that level. Otherwise, this can be a precursor to a turn. The market state and structure is the strategy foundation for the session, and we're always looking for what theme is in play. And currently, at this point, we've wound up. We're starting to break out. Is this market going to confirm and transition into a hedge theme? That's the decision that's being made right now. And if it's going to transition, we're going to see the market build structure above here, and it's going to scale higher. And if it's not, it's going to tell us that it's in this theme, this optimal strategy theme, and we're more of a digestive trade. So we're going to look at the order book now and see if we can find some tells. This is some new integration we have with Jigsaw Trading. So we can see the market did press up in here, and as the market is coming into this extreme, we do have, this white area represents liquidity and resting paper. And here this liquidity is moving out of the way as this market's charging higher after Yellen speaking. So we have this event that's happening. But what's interesting about this is we can see this liquidity build up here off the CR plus. So that's what I like to look for. So this is a tell that the order book's giving you that this market may have some issues. As she's coming out, we get this liquidity moving out of the way, and all of a sudden it's coming in here, and it's coming in front of the CRX plus. And then the market's backing off, and we see we are getting some support here, which it should, because we should see this liquidity just build up and start to push this market higher. And then here we see this liquidity shift. Again, we're always looking at what theme's going to be playing out. Are we going to scale higher, or are we going to drop back into neutral? And the order book has given us some tells. It's lighting up above the market here, and this support that was starting to push this market higher is shifting here. It's going away. So as this liquidity moves out of the way, it starts to shift down here, And then here we get some liquidity coming in to try to push this market higher. You know, this paper hasn't shifted. It's drawing a line here saying, this is our lid. We're sticking here and it's coming in at the CRX plus. And then we get this little bit of a shift here where this liquidity is getting out of the way and trading, and now we're having a little bit of a shift down. Here's our upside pivot. We know this is the top of the critical range. This is the variance, and this is the alert distance. And so we had the market come in here and we held the variance. So we had a surge up, exhausting in front of the CRX plus. We saw the liquidity build up there. We know there's good resistance there. And now we're coming back down to the breaking point. This is really the hold or fold level for this positive momentum. If this momentum is going to hold, one, you've got price structure here that's matching up with market structure. So this is always a nice feature. And you have the order book here lighting up. So you've got a lot of good confluence here that's saying this is the point. The market needs to hold this point if it's going to continue higher. And here we take out this paper, we get a little bit of liquidity shifts where it starts to go away, and we take it out. And here's our sell opportunity here. This is a confirmation. This is what we call a reversal. So the market comes up, takes out this metric here. A lot of times when it holds this area and it doesn't breach this metric above the CRX plus, that's a tell that this may be an extreme. But when it should not come back down below this metric if it's good, and it does here. And this is a reversal strategy. And with a reversal strategy or any strategy, we're always looking for a full APMD. The market does trade in half APMDs, full APMDs, and 2 APMDs, average price map distance. Really, the average price map distance is the distance between two major price map levels. So the upside pivot and the directional, that's 1. So this is a half segment move. And we can see that the order book here was lit up at a half segment. So it kind of gives us a trade vision that where can this market go on this signal? Well, it's going to come down to at least the top of this variance off the CR plus, if not dip into it a little further. So that at least we have that confidence that at least we can get a half APMD lead on this opportunity if this market's going to follow through potentially down to the directional. And then as the market comes in here and it trades here, this liquidity moves out of the way and we go right through it and we stabilize at the bottom of this variance. Again, this is how you can use these metrics, anticipating these markets to kind of work through them. And now as the market is bouncing off here, we can see some liquidity building up at the top of this variance. That liquidity provides a little bit of a reaction, but then the market falls back into this funk. The important thing here is the market's told us something. If the market was going to transition into a hedge theme, it should scale and work positive structure. It should work higher move highs, higher move lows. That's what a breakout strategy does. And if it doesn't do that and it breaks structure, it's a tell. The market is not going to scale higher and it's dropping back into either a corrective or a neutral situation. And if it does that today, it's putting us back into this optimal strategy theme. It's telling us that the market is exhausted here. And so it's giving us this awareness that this is no longer true. We're not transitioning. And we're still in this digestive phase. And if we're in the digestive phase, where can we go? Well, we can pull back to the midpoint, if not rotate all the way back down to the downside pivot. So we're looking for opportunities to sell here. And where do we want to sell? We want to sell against the top of the critical range. We want to fade momentum into this. And the market gave us a small opportunity here, and we can see the liquidity is built up here. And now that liquidity is shifting down, so we're getting some negative pressure here. We're getting some negative momentum. The market's telling us, okay, it wants to go lower, and it's going to start to push it down. And that's in line with this strategy theme that the market is back in neutral, and it's going to start to work its way lower. So we're looking to get on this negative momentum, and the order book can help us. And so when we see it lit up here, and we see some support here, we can have this trade vision that the market wants to push down and make a new move low here and push down through these into this area here. But we know that since we're in neutral, the bigger support is going to be resting down here at the directional. The market does continue to roll over, and now we see it trade below the CR plus metric. And so we can use the order book to help us put some trade opportunities on. So we can see here we've got nice price structure at the figure. So we have this price structure here coming in right at the CR plus. So we've got risk above this level, and we also have risk above our metric, and we can see we have some liquidity here supporting that. So this is, basically above here is our risk if we're looking to sell the market here, anticipating a move down to these levels. The market's identifying where, through liquidity and the metrics, how we can construct that trade. We're always watching price structure within market structure. So here we have the market get extended, the sharp surge, topping out at the CR plus, giving us a reversal signal here, confirming a break in market structure here, pulling back to the low end of this metric, and confirming again that this market's negative back into a neutral state. We do have this negative price action working here, so we can, you have this impulse, pull back, and now pretty much almost a symmetrical move coming down here. But we still have, we're looking at this negative price action, and we're just going to watch that. Stepping in front of this negative momentum. It's an emotional day. We've had a couple of events going on. We want to see this market break structure, and we want to see the order book really build up before we're going to look to buy into this support area here. The R level is the sentiment bias. It's the over-under number for the day. It's always going to be a significant level. It's also a strategy theme, and so we're coming back into this area, and it's going to be a dynamic area. So as the market's pushing into here, we have some price structure here at the top of this metric. This should really hold, and it doesn't. And you can see the order book was built up at that level as well. So here, this price structure here with the market structure. If it's really positive, it's going to start to build a base here. We have this negative price action. We don't want to fade that. And then the market takes it out. And as it's taking it out, all this liquidity goes away, and then all of a sudden it starts to build up here. And we get a buyer coming in. And so that now it becomes a little interesting, because we know that this is a major level, it's major market structure points, the sentiment bias for the session, and we're getting some liquidity coming in below the market. So now we're going to look for potentially a price structure break. So these highs are going to be significant. In the market, if it's going to really press lower, it's going to maintain negative price structure as well. So, and you can see how these highs are kind of matching up with this variance here. And then we get a break in this negative structure, and the market comes back above this metric. So as it does that, and we see this, some sellers come in here trying to push the market back down, but these buyers aren't moving out of the way, and we're starting to get a liquidity shift to the positive, getting more liquidity building up, and so we're getting a pullback to the figure, and we have support below the market. We know this is the sentiment bias level, and we just broke negative structure here. So it's a positive situation. Market comes back up and confirms, takes out this, and now we're coming back up into a surge, back up into the CR plus. So we had a half APMD move, and so that's just confirming that the directional R level is supporting the market, and it's also confirming that we're probably going to just drop back into a sideways mess right now. And the market had a big surge up to the extreme. We've pulled back to the directional, we've stabilized off the directional, and the order book is confirming that. And we can see the liquidity building up here. And that's how the market ends up the session. We do get some choppy action. We get another surge here. So we had the initial press, comes back into our R level metrics, down to the variance here, which is really the entry area that you want where you're going to be buying this market. And then we get another push back up into the CR plus, and we can see how the liquidity just started to build up. We're anticipating a sideways trade. We've got liquidity here. We know here's our risk, where can they go, another half APMD down to this liquidity. I like to look for situations when you have a big buildup on extremes and then it gets kind of dark. We do have some coming in here, but then we have this support resting below the market. So to get clarity, we're always monitoring price action within market structure in the context of the market state. So we know this market's in a neutral digestive state. Structurally, we know that we have sentiment balance, so it could potentially be a breakout day, but we do have conflicting signals here where we have a sell signal in the stochastic and a buy signal in the DMI and a neutral situation for our trending ability. Market, this indicator is kind of dead neutral. Our optimal theme is to go sideways within the critical range, or we're going to have a breakout event which is going to start from sentiment. We did have an event today where we had a news event, got the market excited. Should have scaled immediately, it didn't. A lot of time this is a tell when the market does break structure like this. It's not pretty. It's a tell that this is going to happen. So when you do have that emotion off a figure, you're coming in here and it's holding structure, respect that. And at this point here you have clarity. At this point here the market's telling you there's an issue with this breakout signal. This market is transitioning back into this optimal strategy theme. We never really got out of it. The news just kind of expanded these parameters. And that's your awareness. And they never should have broke that structure. And we saw that in the order book. And then that gives us confidence that this market can make a play from this zone down to this zone. You know, a full APMD. We get that signal. Where can it go? It can go here. It can transition all the way down here. We're basically back in that neutral digestive state. For more information, please contact us at info@jsservices.com. Good luck.